The thing is, most investors are hesitant to look outside their borders, especially in relation to a new asset class. And this is where the European Investment Fund, EIF, can come in. Hi, Lauren Fradgley. I work with private credit at the European Investment Fund. Today, EIF Talks, Weathering the Storm, how private credit is supporting small businesses in Europe. Thank you. Imagine being a small business in 2009. You've just witnessed the collapse of the real estate market. Lehman Brothers is bankrupt. Your local bank is closed. What does this mean for your business? Can you grow still? The thing is, we all need growth. The growth of the economy is linked to the growth of the lower end of the market. So, if banks and traditional lenders cannot play the same role they once had, we need another solution. Private credit funds, investment vehicles that lend money directly to companies. These funds became an important player in our financial ecosystem, meeting the demand, the needs of borrowers. So suddenly, small businesses had access to credit suited for their needs. But who's on the other side? Who's providing capital to these funds? The beauty of private credit funds is that they didn't just meet borrower demand, but also investor demand. Investors looking for yield in negative interest rate environment could find it in these funds. Fast forward a few years. Investor demand, borrower demand is there, but there's work to be done. Private credit funds are only flourishing in a handful of countries. France, the UK, Germany, the Netherlands. These markets have ecosystems friendly to private debt, advantageous regulation, investors willing to support a new asset class. And because of that, we've seen the snowball effect. Once one or two funds are established, more follow. Investor confidence is raised, and this leads to 5, 10, or more funds, but only in that country. The thing is, most investors are hesitant to look outside their borders, especially in relation to a new asset class. And this is where the European Investment Fund, EIF, can come in. The EIF can help new fund managers seeking new investors. By taking cornerstone investments in these funds, we can give confidence to investors looking at the asset class for the first time. We can also help alternative credit providers, both inside and outside their home country. If we widen the investment pool, if we create a new source of capital for these funds, we will be creating a sustainable source of financing for small businesses, and not just in that country, but across all of Europe. The EIF will be supporting long-term economic growth. Let me give you an example. The word fintech, we hear it every day. Well, there are debt funds that are now utilizing crowd lending platforms to source new businesses, to underwrite credit, to originate new lending facilities. And we're finding that borrowers are actually turning to these crowd lending platforms as a financing solution. Investors, however, are again hesitant. The concept is new. And this is where the EIF is again working. By taking cornerstone investments in these funds, we hope that other investors will crowd in and will also support this asset. We recently made an investment in a fund that's providing financing through lease facilities. So this fund empowers SMEs. They can choose their own manufacturer, their own piece of equipment, a piece of equipment that the business needs. For some small businesses, the bank's a perfect solution. They provide everything that the business needs. But for others, the standard monthly repayment plan, the short duration, the security package required, it doesn't fit. It doesn't work. We mustn't forget that small business, the business in 2009 that couldn't access credit. Now, with private credit funds, we have a sustainable source of finance, a source of finance that should weather any storm.